The West Australian industrial property sector continues to show resilience, despite there being a significant shift in market dynamics over the past 12 months. Occupier demand and activity in the second quarter of 2016 has improved, following a very slow start to the year. We are experiencing an emergence of activity with the engineering and workshop space, a sector that has been inactive for over 12 months, with consolidation and flight to quality themes evident within all current mandates. JLL have recorded approximately 120,000 square metres of gross take-up across the Perth market in the past 12 months, with 42,000 square metres of this in the first 6 months of the year. Supply completions for the first half of the year are above the 10-year average, with 175,000 square metres of new accommodation being completed to date, and an estimated 32,000 square metres scheduled for completion by year end. In a similar trend to our eastern states markets, WA's new supply continues to be heavily dominated by pre-commitments, with approximately 97% of this new stock being under this structure. We have seen rents decrease across the majority of all submarkets, with significant reductions evident across the secondary and tertiary grade accommodation. The rental decline is largely attributed to increases in vacancy, as existing landlords and developers compete aggressively to secure tenants. In contrast, and at the premium end of the market, there continues to be an undersupply of high-grade facilities in the 5,000 to 10,000 square metre range, with recent evidence suggesting that this stock is holding value. Incentives, which have not traditionally been a part of negotiations in the Perth market, are now playing an increasing role in securing tenants. Broadly, incentive levels are ranging between 8 and 15%, which comparatively remains amongst the lowest in the country. Despite the changing market dynamics and recent financial market volatility, demand for well-located, well-tenanted industrial assets in WA remains buoyant, far outstripping supply levels. The low cost of debt, coupled with the wide spread between industrial property yields and the 10-year government bond yield, or risk-free rate, will in our view continue to drive investor interest in industrial real estate in WA, resulting in buyers bidding up and driving values in order to secure core assets. As a result of the continued strong investor sentiment for industrial assets and the tightly held nature and private ownership structures of industrial real estate in WA, we anticipate yields to remain stable for the remainder of 2016. Don't forget to check out Insight for all the latest news and research on the industrial property market, as well as the latest sales and leasing opportunities available at JLL.